Hello everyone, welcome to my channel. Today, let's predict the price trend of supermicro computer stock. I am a swing investor, and I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 to 3 weeks. Welcome to subscribe to this channel. After Supermicro Computer announced its preliminary results for the third quarter of fiscal year 2025, market sentiment was out of control. Disappointing data caused its stock price to fall by nearly 20% during the intraday trading on Wednesday. But then the stock price rebounded strongly, and after the close of Friday, the stock price returned to near the 5-day moving average. This shows that despite the company's poor third-quarter performance, the market's buying enthusiasm is still high, which seems to be due to the company's position in the artificial intelligence boom. If it is measured in months, the stock is still in a downward trend. But we also see that the stock has experienced 3 bottoming out in April, but the stock price has not fallen below the $27.60 level in the last 2 times. This means that the market still does not want the stock price to fall sharply, and the signal that long capital has intervened in the stock again is obvious. Through the 30-minute chart of the stock, we can see that the stock rebounded strongly and released a large number of transactions after the stock price fell deeply on April 4th, which should be the intervention of long capital. But on April 8th to 9th, when the stock price was at a relatively high level, a large number of transactions were released again. Although some chips were sold here, these chips seemed to be eaten up by the long forces. The stock price squatted from April 17th to 22nd, and then started a small bull market. But from the perspective of trading volume, it seems that the shorts did not sell too many chips at high levels. It seems that some investors have not reacted yet, and the stock price has plummeted. The stock price adjusted deeply downward on April 30th with a large trading volume, which was regarded as a signal that long capital intervened in the stock again. The stock price then rebounded strongly. But we also see that the stock seems to have encountered a certain amount of selling again when the stock price was at a high level on May 2nd. Although the trading volume on that day was not large, it reflects that the stock is currently facing a correction pressure again. Let's take a look at the position distribution data of the stock. In the past 3 trading days, the stock's positions have moved down significantly, which is a characteristic of the stock. The position distribution of the stock has been changing rapidly. We see that the stock's positions seem to be moving towards the middle area, with a price range of $31.10 to $34.70. This means that as the stock price rebounds further, the previously high-level locked-in positions and some profitable positions have sold their chips. Although this wave of selling of the stock has not destroyed its rebound trend, this wave of selling may continue and may cause the stock price to pull back again. But as mentioned earlier, the stock seems to have long capital involved at a low level, so the stock price has limited room for correction. So what caused the stock to rebound strongly after the plunge? In the company's preliminary third-quarter results, its adjusted earnings per share were 29 cents to 31 cents, far below analysts' forecasts of 54 cents. Similarly, its revenue of $4.5 billion to $4.6 billion was also lower than Wall Street's expectations of $5 billion to $6 billion. In the statement, the company also lowered its revenue forecast for the quarter ending March 31st. The new revenue forecast implies an 18% increase, down from a 200% increase in the same period last year. The company attributed the poor performance in part to delayed customer purchases, which delayed revenue that was originally expected in the third quarter to the fourth quarter. Of course, its stock price plummeted for a reason. Investors are closely watching whether the surge in AI spending shows signs of slowing down. But we must also be clear that the development of AI also affects the stock prices of semiconductor companies. With the further rise in NVIDIA and AMD stocks, it seems to have blown away such investor concerns. There are reports that large technology companies including Microsoft and Google are actively building AI infrastructure, and the server market is also accelerating over the next 3 years. This will undoubtedly drive Supermicro's net sales and profit growth. So is there room for Supermicro stock to rise further in the short term? This is the option data based on the strike price distribution of the stock expiring on May 9th. It is obvious that the call option trading accounts for a higher proportion, and the strike price range with higher volume distribution is between $33 and $41. The strike price range with higher put option trading volume is between $30 and $34. This reflects that most investors believe that the stock still has room to rise further in the short term and may hit the $41 level. Let's take a look at the ratings of Wall Street analysts on the stock. Based on the stock ratings of Supermicro by 10 analysts in the past 3 months. Among them, buy and hold ratings account for 40% respectively, while sell ratings account for 20%. The average target price given by these analysts is $46.70, with a maximum of $70 and a minimum of $15. Overall, Wall Street analysts' ratings on the stock are still relatively positive. Let's go back to the daily chart of the stock. Although the signal that long capital has intervened in the stock again is very obvious, the selling pressure on the stock still exists. There are still a lot of positions in the area above the current price that have not been diluted, so the stock price may continue to consolidate at a low level, but the bulls will not let the stock price fall too much, and it is expected that it will not deviate too much from $31.10. Then the stock will rise further, and the target price may be around $40. Okay, guys, this is my price forecast for Supermicro computer stock. Thank you for watching. If you agree with my analysis, please share and subscribe to my channel. See you in the next video.